bound only by frozen memories. Lost in time, racing all these broken dreams. Take me away from home. Show me all the places I've never known. And we'll chase the night. Erase all of these broken dreams in flight. And we'll fly.
All right. Hello everyone. Welcome to today's stream, today's second stream, market close. Let's check and see if we are going to see something interesting in today's market close happening. Pretty much a green day. The tech stock has moved incredibly high. However, the financial, the utilities, many of the precious metals are down today, obviously because of the comments of Jeremy Powell. So all in all, it makes like for us, the tech and growth kind of lovers, a pretty much green day. So let's start a little bit with the general market. Nasdaq is up 1.64 right now. S&P is 0.22. Euro USD obviously down minus 0.7%. Bitcoin is down again minus 2.75. Someone was saying that problem for basically Bitcoin during the weekends. No, it's not. It's not. I think the main point that you have to actually remember is that I think the Fed's comment, what it meant, was exactly what we were looking for. We are talking about a system where there is no hike in the interest rate this year, so we are free to do what we want to do this year. Then, of course, at some points people might still panic, but because the uh, tapering, the basically interest hikes, all of these gonna be done gradually, then that means that you basically have a lot of room actually to make your decision. So there is no, uh, how to say, people are not scared anymore. But of course, that means that the dividend stocks, the stocks with financials, basically with utilities, these are actually all down today because of that. We can have a look. As you can see, our main play, AMC, is actually up today. It's up 14%. And I'm telling you, if we can keep this over 60 level long enough, then I think hedge funds are in a problem. It has been moving like this is the range that this thing has been bobbing around. Maybe I put it up here. So if we can keep it above this value, then there is a very, very big opportunity for the squeeze. And that's the only way that it's gonna work. People always ask question. I think no one really knows the exact answer, but I think just buy it and hold it. And if it comes back, then I would be happily adding to it if it's around this point. You can see that a couple of times it came and touched this one. And also this one can actually act again as a resistant, but as a support. But for me, it's in a very good position. I guess the general sentiment in the market is good, so we have to just wait and see. There is no other way to handle this case other than just buy it and hold it. But we have a lot of time before the market close. Let me check. Let's listen to this guy.
About a $75 billion surplus. That's an enormous swing. And we're seeing that in other states as well. It's not just California. Some states that are a little bit more reliant on tourism haven't fared quite as well. But in general, when you think about what the stock market has done, when you think about the housing market, incomes have done well. People have spent. They've spent differently, but that means sales taxes are up as well. So I would say, yes, fundamental credit picture in the muni market is as good as we've seen it in some time.
And Peter, we've talked about, the tax implications with muni bonds. With the current discussion about changing the tax code in the United States, are you hearing anything pro or con coming out of Washington, which will impact, again, those people I talk about who may be looking at protecting capital going forward?
We have, and I think that the marginal rate going from its current 37 to 39.6 is certainly a possibility as they figure out ways to pay for this infrastructure package. But at the margin, those 2.5 percentage points make a big difference in the after-tax value of municipals? Probably not. I think people are already anticipating that, and that's why we've seen this tremendous demand materialize. The other aspect is the corporate rate. After the 2017 tax change, we went from a 35% corporate rate to 21, and we did see corporations who are often big buyers of municipals pare back their holdings, so we saw some selling. If that rate were to go back up to 25%, however, you wouldn't see all that demand materialize. You wouldn't see all that selling that took place in 2018 all of a sudden turn into buying. one of the reasons is that our valuations are very, very stretched, and they could probably do better by buying corporates or other fixed income asset classes. So I don't think the change in the tax code is necessarily going to be a big benefit or game changer for munis anytime this year.
Peter Hayes, always great to speak with you, head of BlackRock's Municipal Bonds Group. We look forward to having you back soon. Coming up next here on Yahoo Finance Live, we'll talk about the meme stock phenomena and how it pertains to gaming. We are going to talk with Mark Douglas, who's the CEO of Mountain, right after the break.
Yeah, so that is about that one. They're going to talk about probably AMC and other so-called meme stocks, so that's going to be interesting. All right, let's go to 4 hour. This is, let me check. This is a week. So here we discussed the other day about a perfect, not a perfect setup, about a good setup, a possible good setup for basically Shopify. So what happened was that if you wanted to take this position, it would have been starting from, let me do it with this long. Here you have it here, then this is your down risk, and then you could actually have, for example, 1.5 times so on. But the problem was that when we saw this, so early in the next day, it started to be up pretty much here. And what happened was that we had two resistance levels here and then the next one here. And then there was this Fed meeting, so that was basically a very risky position in that sense. So we did not take it. And but again, the setup was correct. Everything was meaningful there. So we just didn't take it because I actually didn't want to make the risk. And obviously, when the Fed comments were that good, so you can see this is a good one. The good part with this method is that if it sets up, there are still like a couple of deprecating factors that you have to consider, and there were one of them here, that both of these crosses for us were were above the zero line. That means that the stock already had some momentum left, and the pullback probably was not much. I mean, that doesn't mean that it wouldn't go higher after that. It just means that if it pulls back in an upward trend, if it pulls back more, then there is more room to grow. So again, it's just a deprecating factor when you are considering to make a trend. But obviously, if you were taking anything in that sense, you would have made money. But this is my setup, and we discussed about it, so I wanted to touch on that. Another stock, let's talk about Etsy. All right, so this is Etsy. This is up 1.92, and all right, so it's actually hitting here, but it's not important. Etsy, after the projected lower growth of next year, they were basically going down, despite the very good, amazing numbers that they had. And since then, it was moving in this channel some sort, and it has been 1, 2, 3, 4, 5, 6 times or even more hitting here. So now when there is this sort of cross here, despite the fact that in the longer time frame we are still in a downtrend. So in the higher time frame, that is weekly, it has been shown that it moved here. There was this point where it just started to change direction, and now it's the idea that is it enough or not. I actually think that Etsy can go lower, but if it goes lower than this, up to really, like, I really don't think it goes to 115. It will be a steal at these prices. But if market for some reason gets crazy and wants to actually dump more of the Etsy, then it would be a perfect opportunity for me to buy, but or actually add. So at this point, I think this here, hitting here, is a good opportunity as we took it here. And you can see that the upper is around 6 to 5%. I think this is a trade that you can also make. I've opened it, not with a lot of money, but I opened a small position in this. And let's see how that will work. Zillow is another one that we took. And okay, yeah, sure, I will do that. No problem. No problem. I will check an NDM as well. Almost every day, someone is asking about an NDM. I will check it. No problem. Zillow also. Zillow has been in this basically downtrend, and in this downtrend wedge, basically 1, 2, 3. I mean 4, 5 times almost here. 1, 2, 3, 4 times here. So I think based on how the market is moving, I can see that Zillow go back. It can still play a little bit in this range. For me, this is the point. 104 is really the place that you can add, and it has a lot of potential actually after hitting here to come hit here. It can again come back and then go up. If it comes back up, then there is somewhere around here you will have your, like you have some resistance at this point here. You will have your 200 EMA, and it can come back to either of these limits. It can even come back to this one, but another scenario is that this will go above the 200 EMA, come back to 200 EMA, and then move up. So yeah, this is my prediction of this. So you can either have this move directly up here, or it can come down and then it either gets played here, or another scenario is that it directly, like without any problem. I mean, it can just come here, come out of it, gets rejected here, comes back to this line, and then go back up. So this is another scenario. So it can just directly go, it doesn't play inside that. Zillow is a good place right now for this, and the only thing that I like to see, of course, is that to be sure that this upper trend gonna be there. So if it comes down a little bit, I mean, it has been on 4-hour time frame, it has been really playing in this small area. So we really need to get a breakout of this, and then we can be sure of that. I am still I think Zillow is, I'm up 3.5%, but yeah, I think there is more to come from Zillow. I really have to add to this position, and I think that is an interesting buy as well. Did we miss? I guess we missed the meme stock rally. Should we go back and watch it? Maybe it was here.
Why do you need a Roku? Isn't all of that eventually just going to merge into one simple one-stop click and off you go?
Yeah, absolutely. You don't need it. But what the market, and I mean by consumers, have decided so far is they want special purpose devices. So if you have, like you said, an Xbox or a PlayStation, most people are using that for gaming. We see connected TV penetration on those devices is under 10%. Most consumers are instead opting to get an Apple TV, Roku, Amazon Fire Stick, or Google Chromecast. And part of that is because they're pretty inexpensive to get. So people are getting both.
Mark, explain to us how you think that this is kind of fueling the phenomena that we're seeing with meme stocks, and specifically what we're seeing in GameStop, because when you take a look at the fundamentals of the company, it doesn't make sense that we've seen so much interest, obviously, within the stock. But as you point out, a lot of retail traders can relate directly to maybe what GameStop has or what they offer, and that's why they're buying it.
Yeah, so I mean, the whole meme phenomenon, that whole trend is originated on social media, and in particular, Reddit. And I mean, it's almost like a stock market lottery, except you can just time your way into winning by getting into those stocks early, riding them up, and then selling at the right point. I think the thing that you're referring to is a lot of the stocks, these early stocks have gotten that treatment. They have been gaming stocks. And I honestly, there's not a clear reason why they're gaming stocks. I think one thing is just kind of maybe a subtle slapback at Apple, which has such a huge position in the gaming market now, and kind of preserving and giving these companies the brand lift from what's happening while these traders are making money, these individuals.
At the end of the day, though, it is about money and especially advertising dollars. Whether it's GameStop or whether it's Sony and Xbox, the advertisers are going to determine where they're spending. What are we witnessing right now? Are they going towards more gaming platforms, or are they going towards traditional consumption of media content?
Yeah. So you have, for traditional, what we think of as linear advertisers, they are migrating to connected TV. And like you said, when you migrate, you can choose, do you want to...
Right. This is actually our trade today. Not today. The trade that was closed today for us. We had a sell position in Bitcoin on 4-hour chart. We had two perfectly lined up higher time frame and lower time frame. Also, it was below the 200 EMA, and the basically a stop was lower. So I just went in and it just went above it. We took 2 risk to reward ratio. The reason I'm taking 2 on this one is that I usually take 1.5, but eToro has usually very crazy big spreads on Bitcoin. So it really, if you want to make some money, really, to risk to reward ratio is a good number. So anyway, that was something I wanted to also mention as we were passing.
We have people moving to streaming at a rate of over 1 million households a month. That's a city the size of Phoenix per month, and it's an unrelenting move towards streaming. So that's a huge threat to local stations, and I think long term they're going to have trouble surviving. In terms of folks like ABC and Comcast, the TV networks win either way. They don't care where you watch as long as you're watching their content. Comcast, who has the pipes, I think is potentially the #1 stock to short, probably for the next 5 years. And I don't often offer stock tips, but I don't see where they have to go in this shakeout from linear TV, cable TV to streaming.
All right. We hear you loud and clear, and just want to let you know the team has decided you have the best background of the week. We're going to notify Room Raider. Mark Douglas, the CEO of Mountain. It's good to see you, buddy. All the best to you. Look forward to the next time you join us.
Yeah, all right. That was more about maybe streaming devices than meme stocks, but yeah, that is what it is. Let me check. Yeah. All right, so let's go on. Let's see if we find something interesting. I'm gonna play a little bit of music as well.
Can you dig it?
now it's just like, man, you got to have that time where you just like disconnect from the scene, just the race. Like, and it's a race that I've created in my head, you know? But you have to step away from it.
So fast, all tied up like a captive. I want you. Used to pay my life, standing on rainbows, playing it cool. I haven't felt this in ages, and I know my patience. So won't you please stay a bit longer? You're making If you let me walk away, maybe then we'd lose it all. No. Who am I
as one nation. A Juneteenth of action on many fronts. One of those is vaccinations. Tomorrow, the Vice President will be in Atlanta on a bus tour helping to spread the word like all of you have been doing on life-saving vaccines.
All right, everyone. Thanks for joining again. And that was it for our market close. See you tomorrow at the market open. Appreciate if you enjoy the stream to follow us on Twitch and also like and subscribe in YouTube. It will really help us a lot. Thanks again for your time and hope to see you again here.